Good morning all and welcome to another one of my videos. I have three pairs on watch today. Those are Euro dollar, Kiwi dollar and Aussie dollar. So it's all about the dollar this morning. So I'm going to break these down for you now and give you my forecast, what I will be looking for. Just to say these are not predictions. This is not me saying the market will do this or will do that, as you may have heard people say on some trading view forecasts. This is me saying if the market does X, then I will do Y or Y and Z. Okay, so very different to trying to be right. A forecast is, your plan of action versus you trying to necessarily predict what the market will do. But those of us who trade the Falcon strategy look for patterns, and these patterns typically repeat themselves. So it's the patterns that I'm interested in, and whether my entries shape up, not being right or wrong, I'm not interested in that. But anyway, let's break this pair down for you now. This is euro dollar, and I'm looking at this because on the higher time frames, this is the picture as I see it. We have this 1, 2, 3 touch move, which taps into the last kind of line in the sand, the last area of which there was an exchange of liquidity. You see there was an exchange of liquidity here, and then price continued. That gives me a clue that this is an area that price might tap into before it pushes to the upside, because we tap into it by way of a 1, 2, 3, and that's what happens. We tap into it, we spike just below it, and then price moves to the upside. Okay, so at this point we're looking for impulse correction continuations to push higher, which is the natural ebb and flow of the market. But after such a big move like this, bearing in mind that this is the weekly chart, it's not uncommon for price to stall, and the corrections are usually proportionate to the impulse. It's not uncommon for price to stall before the next leg higher. Okay, so if we just measure this, for example, if we just measure the impulse to the top of this structure here, we would be, if we were pulling back into, say, this region before pushing higher, this would be a kind of 45% pullback, which is a healthy pullback for the market before the market pushes higher. Okay, and but that doesn't mean that we can't capitalize on a move to the downside in the meantime before price potentially does push to the upside. And one of the clues for me that we would likely have opportunities to get short before that potential longer term move to the upside is the fact that we've tapped into this exchange of liquidity here by way of a 1, 2, 3 touch move. We then break above. On the higher time frames, we typically see, as I've mentioned before, price break above an area of liquidity because people are looking at things such as broker ticker feeds, which say things like euro dollar at 1.5 year high. You can see that was March 2022. So this encourages them to buy the highs, buy when price breaks above this area or at this area, and sell the lows. Okay. So one of the reasons that one of the clues for me that this leg was coming to an end, as I've said in previous videos, is the fact that we had a 1, 2, 3 wave move, a very deliberate 1, 2, 3 wave move, which typically speaking indicates that a move may have come to an end, particularly when it lines up with a 1, 2, 3 touch move and an area of liquidity such as that. You can see that when price got to that area last time around, it sold off aggressively. Okay, it moved up very sharply, moved down very sharply, giving me a clue that there were a lot of orders in that area. Okay, we then have the push down and the impulses and corrections. And if I just drill down, those will become a little bit clearer, easier to see. So we have the impulse down, tighter correction into a larger correction, into a slightly smaller, into a larger correction, into a smaller one. This is a good sequence. You might think, well, this looks a bit corrective. Well, it is. It's a corrective wave, but that doesn't mean, we prefer the more impulsive waves, but that doesn't mean that there's not profit to be made on the way down. Okay, what all this really does is tell me is when we have a corrective wave such as this, that gives me more of an indication that that longer term move that I was speaking of is potentially still in play. That longer term move potentially from this area here to the upside is still in play, and that this this is just a middle section before that move up, because typically speaking, these waves down, when they are a middle section before a move to the upside, do tend to be more corrective in nature. So the first thing I ask myself now is, am I well positioned if I'm looking to get short? And the answer is yes. We have a 1, 2, 3 which taps into that area, and then we push down. Where now, if you wanted to extend this out, I've reined it in because I see this is a completed structure. We're trading below that, so we're well positioned. Okay. I ask myself, is the sequence good? The sequence is good. As I see it, I can separate all of the structures as corrective as this corrective wave actually is. And then the next question is, what is the entry like? What entry would I be looking for? And is it, is it high quality? Is it low risk? Okay, so I'm just going to hide that a second. And if I unhide the forecast, what I'll be looking for today is this entry, which I believe is a low risk position. Okay. Now, previously speaking, in my previous video, I did forecast a flag which looked very, very much like this. However, you may have noticed if you watched my previous video that I was looking for a risk entry within a piece of structure. You might notice that I had my trend lines on something like that. Okay. Now, I was anticipating, I made that video at what time was it? Yesterday morning, somewhere in this region. Now, I had it something like this. Now, if this had formed, I would have been looking for a risk entry, right? Okay, because we would have had a 1, 2, 3 which lined up with that. However, because of the angle now, if you look at the angle now, if we did have a 1, 2, I mean, we would have a 1, 2, 3 here potentially, but sometimes you have to use your own discernment. If we did have a 1, 2, 3, we have a 1, 2, 3 here, but we also have a little area of liquidity sat just above it, and as well as that, we also have the back end of this structure here, which price could gravitate towards. So it's not as if we would have this. I'll just touch on it, kind of lining up with that, and we may tap it, which kind of lines up with that as well. And then we would only have this sat above. We would actually have two areas sat above. If we got a 1, 2, 3 here, we would have this sat above and this sat above. So sometimes you have to use your own discernment. And when the structure is fairly flat like this, it is more likely that it would reject from this area. But just to be on the safe side, these things, some of these things you can't always explain. But if we just measure that. This is what I was saying about healthy corrections. If we just measure the impulse down, the corrections are usually within the 30 to 50% range before they commit to the downside. And as you can see here, that would be from here to here, that would be a 50% retracement in that area. So just to be on the safe side, just because there is that little inflection point sat just above that price could trickle to, so meaning that taking a risk entry here where you essentially call the top of this structure could be more risky, because price could tag you in, tag you out, push up to the next one, or even push up to the back end of the previous structure before pushing lower. What I'll be looking for today, especially because as well, there isn't really a middle section. We could be forming that middle section now. What I'll be looking for is price to push into this area, followed by a push down, and then the push down followed by the correction afterwards will be the correction that those of us who trade the Falcon strategy look for to determine whether price is going to move in one direction or the other, because typically speaking, the correction is just the banks and big institutions stacking the orders, okay? And we may actually tap into that area anyway, so we may spike above, spike back down, and then we get the correction afterwards, meaning that we've tapped some of the liquidity from this area as well. And if we get that correction afterwards, then I'll be looking to get short either on the break of or within a flag such as this. And then depending on the size of the flag, I would be able to manage this for something in the region of 4 to 5% in case price just turned, say it found liquidity. There's two sharp points here. I'm not interested in this one so much, but if there was liquidity down here and price came up, let's say it came down, came back up and started forming something more complex, I will be able to as a risk manager, not a gambler, a risk manager, I would be able to manage this trade down to this area for something in the region of 4 to 5%. So that is what I'm going to be looking for on euro dollar today. I like this one a lot. This looks nice and clear. And just to touch on it, I like the fact that this flag has formed below this piece of structure, and that statement will become more relevant as I go through my pairs. I have an alert set just below that area of value. If that doesn't trigger, I will not be looking at this pair again today. So Kiwi dollar, I'm just going to leave that forecast on the chart. On the daily chart, you can see. So one of the things that stands out to me here is that we have, if we just zoom out a little bit more, is that price came up to this area here. We did near miss this area, so that's a slight negative. However, we also have a near miss down here. And price does tend to fill these near misses when it gets close to an area of liquidity and doesn't quite tag them. It does tend to fill them, although not always immediately. Which and that last statement is important when considering this near miss. It doesn't need to fill that straight away. So what I'm seeing here is we have the impulse down, correction, impulse down, larger correction. This is not the greatest sequence in the world by any means, but on the way down here, which will be visible on the lower time frames, we have a much clearer sequence, giving me a clue that the big players have stepped into the market. And one of the clues for me that they have and that their bias is short is that the fact that when we break this low, we consolidate underneath it. So if we were going to fill this near miss immediately, then I would have anticipated, given that we had a 1, 2, 3, I would have anticipated price reacting from this area aggressively to fill that near miss, and we didn't do that. So because we've consolidated below here, and if you look at it, we've kind of retested the back end of that a couple of times, that gives me a clue that there was not enough liquidity here to send price to the upside, which gives me a clue that this potential impulse correction continuation, which I'd be looking for, is still in play, and that we're still likely to take out this near miss first before taking out this one up here. So the next thing I do is I measure this impulse down to the start of this correction here, and then assuming that the continuation out of it would be of a similar length, if we just measure that, so impulse correction continuation, that would take us all the way down to this area here, giving me a clue that this has built up enough volume to take this all the way down to this area here. Okay, so once again, I'm pattern separating. I do slightly prefer the sequence of this over euro dollar, but just not this particular this particular structure here. And one of the other slight negatives versus euro dollar is the fact that this correction has formed through this low rather than below it. Okay, so I said to you what the last thing I said on euro dollar would become relevant, and that's one of the things that I mean by relevant is the fact that this correction has formed through this low. This correction has formed through this low rather than below it, as it had in euro dollar's case. So what I'll be looking for today is the same thing, bearing in mind that this is just this hasn't got a 1, 1, 2, 3 leading up to this. This is just, and it wouldn't have if it was to do so by the end of the day. This is just we can see the hook point, the footprint in the market that price has left with the sharp move up followed by a sharp move down, giving me a clue that the orders are in that area. And of course, if I measure where the impulse started, that would be, if we pull back to the area, just over a 50% retracement. So that's more than healthy. And the clue for me, if one of the things I've been paying closer attention to, the clue for me that this was likely the middle, as soon as we push down, that this was likely the middle section before a push back up. So often we see these middle sections which look kind of like that, and you can kind of separate the structure within the structure. One of the clues for me is if we just drill down to the 15-minute chart, what we typically see if these moves down our middle sections before a move back up to an area of value is we tend to see a correction like this, which is disproportionately large relative to the move down. And you can see here that we have the impulse down. It is an aggressive move down, but then we have a retracement, which is like 70 to 80%. You see, I've not even got the 80% on the scale, so it's a very big pullback. We don't tend to see these straight away if price is just going to blast to the downside. And the other thing is, on the lower time frames, we don't tend to see price move too far from a point such as this if it's going to commit to the downside. So when we broke above this by a significant amount relative to this correction, that in itself already tells me that there was not enough liquidity at this area to send price to the downside. And the second clue was the fact that the correction after the impulse down was very wide relative to the impulse itself. That gave me a clue that this was just the middle section before a push to the upside. Okay, so what I'll be looking for today is a tap into this area followed by a push down and a flag, and that's why I've drawn this move from about here, because as I said, if price is going to commit to the downside, it typically won't move very far from here if it taps into the area, because the limit orders and the stop orders will be sat just above, not too far above. So I'll be waiting for that push down and the flag, and then I'll be looking to get short once again, either on the break of a flag such as this or within it, and then I'll be able to manage this down to these lows. So that is Kiwi dollar. I'm just going to speed up ever so slightly because these videos can only be 20 minutes long on TradingView. So Aussie dollar, similar story. We tap into this area. I do like the fact that there kind of is a near miss to this area, but we've tapped into this area. We push down and then we get the impulses and corrections. Again, we get another wide one. This sequence I particularly like, down to this area. Once again, we tap into this area, and if we were going to reverse to fill perhaps this near miss, then we likely wouldn't have consolidated for so long below the low. That tells me there's not enough liquidity there once again, and that we're likely going to take out this standout low here. As I drill down, you can see the sequence there. Pretty nice sequence. Quite happy with that. This is last on my list partly because we don't have the structure is not as clear. The high time frame structure is not as clear as euro dollar. I would say it's as clear as Kiwi dollar, but we don't have in this instance, we don't have a near miss which got close to this area. So that's not a negative, but it's just I prefer setups with that. And but the main negative for me is the fact that this correction, I don't think this is too much of a concern, but this correction has formed above this low rather than through or below it. Okay, so that's once again one of my filtering processes. So if all of these trades were to shape up at the same time, I would take euro dollar over Kiwi dollar over Aussie dollar. So that's the filtering process. Once again, if we just measure this correction here, once again, that is a 43% pullback. Nice healthy pullback. Once again, we break above this first point when, as I said, we don't tend to break too far from it if we're going to push to the downside, giving me a clue that this push down here was likely the start of a middle section. And once again, very similar to Kiwi dollar, look at the correction afterwards. We impulse down, huge correction relative to that impulse down, giving me a clue that this is just, for those that don't understand what I mean by a middle section, this is just like a structure within the structure before a push up to that area. Okay, so the patterns that we look for are typically fractal, and these corrections, if we analyze them, we can determine what they are likely to be, whether they're price committing or forming a structure within the structure. So what I'll be looking for, once again, you guessed it, I'll be looking for price to tap into this area. I haven't got an alert on there for some reason, I don't know why, so I'm just going to set one now. There's my alert set. If we tap into that area and we push down and we get that flag, then once again I'll be looking to get short either on the break of or within the flag. And the clue for me why I'm not concerned too much about this low is because we've tapped into it once, we tapped into it twice, and if we push up to this area and push back down, then that gives me a clue that there was not enough liquidity here to send price to the upside. And even if we got this structure, I would be able to manage it down to that low, even if we did react from that low, but I think we'd more likely react from that area there. So that is those are my pairs today. I hope you're taking some value from this, and I will see you again in tomorrow's video if I have a pair or pairs on watch. Thanks for watching.